mortgage loans that exclude student loan payments from your debt ratio for physicians. That is a mouthful, but that is today's topic. Thank you so much for tuning in. If it's your first time, welcome. If it's not your first time, welcome back. I love spreading anything and everything mortgage education. I'm Stephanie Weeks, and I've been a mortgage lender for over 18 years. Today's topic, like I said, is basically excluding student loan debts from your debt ratio when it comes to being a physician and helping you get into a house, because physician is one of the professions that tends to tag along with very, very high student loan debt. And the way that some of the student loan debt is calculated can really, really mess up someone's ability to qualify. And that's been the topic that's come up in a lot of different instances and articles and things, because it can be frustrating. And recently it's led to some changes in the last year or so, although the last 2 years kind of blend together, so maybe it's in the last 2 years, where they have lightened up on that in some ways. But we're not talking generically. Today we're talking about physician loans. So typically what happens is, and every program's a little different, but let's say that you have, let's say $100,000. No, let's say more like $165,000, because that seems more reasonable, right? $165,000 in student loan debt. A lot of times you would have to count a payment of $1,650 because you're not yet in repayment and we don't know what that payment's going to be. It's hard to get that paperwork, although it seems like it shouldn't be, but it is. And so $1,650 a month can really, really alter someone's budget. And sometimes with some programs you can cut that in half and use $825, but why can't you take advantage if you're really in deferment? That means you don't have to pay for a certain period of time. Like, why can't we take advantage of that? And we used to be able to, and with some of these specialty physician loans, we actually can. So let me explain that to you. Now we're talking about physician's loans, just to give you an idea. Doctor of medicine, doctor of osteopathic medicine, doctor of optometry, doctor of podiatric? I don't know, DPM, I don't know about that one, I'm saying it wrong. Doctor of dental surgery, doctor of medicine in dentistry are some of the things. So a doctor's program is a unique program which allows flexible guidelines and used to qualify borrowers who are beginning a specialized profession. Now, some of these loans are 100% loan to value. Some of them are 95% loan to value, so they're low down payment. Some of them have no monthly mortgage insurance, which is another huge thing. Some of them allow future income where you haven't started yet, another huge thing. And of course, the big thing is the ability to exclude student loan debt from the DTI. And so how does that work? That actually will be a couple of different ways, and some of the different investors require different things. So if you are in deferment for 12 months, then we might be able to exclude it all together. If you are, let's say that you're in residency, okay, and you've got around 6 months, 6 months of residency left, you can get a letter from your employer basically that says, hey, he's got or she's got 6 months of residency left, and then we compare that to the credit report, which shows how long it's deferred and the anticipated repayment date, and then we might be able to pair those things together to completely and utterly omit, in this example, that $825 or that $1,600 from your debt to income ratio, which really can affect how much a person can qualify for. So it's really good. It's a wonderful specialty product that's available for physicians. Hopefully they'll have something come out for maybe attorneys or other professions as well that typically have a higher student loan debt that goes along with that particular profession. So if you're in residency and you haven't started your job, but you will soon, you still might be able to get a mortgage. So you're in residency or you're finishing residency and you've got student loans that you don't even want to think about the balance, then you still may be able to get a mortgage loan with that as well. So there's a lot of wonderful things about the specialty product, and there are absolutely ways to be able to exclude student loan debt from the debt ratio when a physician is trying to qualify for a home purchase. Thank you so much for tuning in. Don't forget to like and subscribe. I can be reached at 985-300-LOAN, and I look forward to seeing you in the next one.